back to a new video. Sorry, I've been kind of reluctant to post. I just couldn't find any good swing trade ideas or any good ideas that I wanted to share with you guys, and I just want to bring you guys quality instead of quantity. So this is a really good one that I found and I entered this week on the market dip. This is on KNSA Pharmaceuticals. Shout out to Monster Stock Picks. If you aren't subscribed to him, I would subscribe ASAP, and MZia for showing me the stock and giving me a little more of a rundown on what this bio company does, how they do it, and what the future looks like for them. So this is on, like I said, KNSA Pharmaceuticals, ticker symbol KNSA. If we hop into their pipeline for a second, you can see that their pipeline is kind of advanced with one drug, Rilonacept, being the main drug that I'm going to be focusing on today. They have FDA approval March 21st, so in about 2 weeks. So let me talk a little bit about what approval could do for KNSA. So right now, this drug is like orphan drug status. There's no cure for recurrent pericarditis. It's just steroids. So the only other alternative is steroids. There are about 30,000 people suffering from this disease, and if they even manage to cover half of the 30,000 people with an average cost of 250,000 USD per patient, they're looking at about $3.75 billion in revenue, or in sales, in sales revenue, same thing. So this is huge for the company. So after FDA approval would be huge. If we want to look at the market cap, KNSA Pharmaceuticals market cap, I forgot the market cap off the top of my head. It's only 1.53 billion, right? So looking at that, normally you trade about 4 to 5x that. So first, so at $3.75 billion, this should be trading at 12x of what it is. And obviously that's like kind of unrealistic, whatever, but I will be showing you technically where we're going to set our price targets and how we're going to achieve them and why we're going to achieve them. So I also wanted to say that right now we're betting for FDA approval. And yes, betting with FDA approval is kind of risky, but done under the right circumstances, you will not lose sleep over these plays, and I'll tell you why. So if you go into the FDA data for this one, clinical trials, they hit both endpoints of the data, which basically means that their drug works 100%. Hitting both endpoints means it works, and the side effects are very minimal. Maybe like a little bit of diarrhea, whatever. It's like the side effects does not outweigh the benefit. Secondly, since this is an orphan drug, and since it works, it's kind of criminal for FDA not to give the people suffering a treatment if they have a clear treatment, right? So the only reason we could not get FDA approval is paperwork, if they mess up paperwork and stuff. So I really hope they have that covered. Like, that's the least we could ask for our shareholders, but yeah, it's a good stock to support too. Okay, so now let's hop into the technicals and show you why this is coming up to be a very strong play. Okay, so as you know, my other videos, I show you some like wedge breakout techniques and that stuff, but this new way of technical analysis, or this strategy of technical analysis, is the most predictable and the best way to trade. It's proven to be the best trading strategy combined. So when you combine it with due diligence, you're off to a good start trading. Okay, so what I'm going to show you guys is, they're called Elliott wave impulse patterns. Okay, so all Elliott wave impulse patterns can be broken down into five waves. So I'm going to show you what I see, and then I'm going to put a picture on the corner of how it looks. Okay, so we have our wave 1, wave 2, wave 3, wave 4, wave 5. Okay, so looking at this, you're like, this guy's an idiot. Anybody can go draw 5 waves. So I already looked at this one before, so that's why I know this one works. There's a couple of rules when looking at Elliott waves. I'll give you guys the full rundown. Wave 2 cannot retrace more than the beginning of wave 1, so we're good on that. Wave 3 cannot be the shortest of the 3 impulse waves, so in this case, wave 3 is bigger than wave 2, and wave 4 does not overlap the price territory of wave 1, so we're good with that too. and wave 5 needs to end with a momentum divergence. So the big thing here is right now we're on wave 5, right? And wave 5 works the best when there is a clear catalyst and a clear change in why the stock price should go up. In this case, it's our FDA approval, which should rocket the stock price in the long term and in the short term, since we had a nice sell-off. So everything's lining up. We have a catalyst to really push our wave 5, and everything else is lining up. And I'm going to show you, this isn't it, so if I pop the picture back in the corner, inside of each wave we have different waves. So right now we're on the weekly. I'm showing you the bird's eye view of what we're seeing. But if we hop in to, let's say, the 4-hour, I just want to give you guys a rundown so you guys know what you're buying more than just me telling you it's a 5-wave Elliott pattern. Okay, so let's get the, okay, so here we have our wave, oh, it's glitching, did I even click it? Okay, wave 1, wave 2, wave 3, wave 4, wave 5, okay, so that's the pattern inside of the pattern. Okay, let me just make it a different color, probably, yeah, purple is good. Okay, so then when you come down, the easiest pattern coming down is called the ABC pattern. So this is our sorry. I need to grab ABC Elliott wave correction. Okay, so ABC. So let's make this red for downtrend. Okay. And then the next one up, we need a 5-wave to the upside. So let's see if we make a 5-wave to the upside. So you have your 1, 2, 3. So this is your 4, and then this is your 5. Okay. As you can see, wave 3 is still longer than wave 2. Wave 2 does not reach the bottom of wave 2, and wave 4 does not overlap the price territory of wave 1. So everything is making perfect sense. Okay, so this downtrend one, if you guys want to look deeper into it, this is called a 533 Elliott wave correction. It's basically how when you have a 5-wave to the downside, and then a ABC to the upside, and then an ABC to the downside. That's basically, sorry, a 535, where you have a 5-wave to the downside, ABC to the upside, and a 5-wave to the downside again. So if I want to show you guys that, so you have your 1, 2, 3, 4, 5, and this 3 should be here, and this 4 should be here, sorry. So we can label that in red. I'll put up a 535 in the corner so you guys know a little more what I'm talking about. It's not just gibberish. So then here, since we're already on that, 1, 2, 3, 4, 5. So this one should be here. These ones are off, these green ones, because we're looking at such a high time frame in the weekly that you can't really pinpoint the bottoms, and I didn't really try to either. So, and then here I just want to show you that this is corresponding, and then here you have your ABC to the upside, so A, B, C. So this is called a 535. We clearly broke out of the 535. Now we're kind of going into this range. This is like an ascending triangle one. I'll put up a picture of that if I remember to. Okay, so now that it's clear that we're forming a clear Elliott wave, we're following these Elliott waves to the T. You have the 5-wave impulse waves to the upside, you're forming an ABC downside, 5-wave to the upside, 535 correction. Now we're on our wave 5, kind of waiting more for FDA approvals. So I highlighted to you what kind of pattern we're following, and this is kind of the best patterns to follow. So now let me give you some price targets. Okay, so to calculate wave 5, so this is kind of more of a tutorial and a technical analysis combined with swing trade, so trying to give it to you all in one. So if you want to calculate kind of a price target of wave 5, we can take the length of wave 1 and the length of wave 3 and combine the two and get 61.8%. That's like a Fibonacci number, which works. But wave 5 either is that price target, is where we take off a chunk, and then the next one is, it's whatever comes first, a divergence in the stock price or this price target, and if we still, so then let's say we hit the price target and we still have yet to hit a divergence, then we can go ahead and just take off half and do as you wish there. But so let me open up the calculator, and let's take this. So length of wave 1 is about 14.57. 14.57. Okay. Length of wave 3 is about 19.50. 19.50. Okay. And then we take 61.8% of that. So times 0.618. And we got our wave 5 length of 21.5. Okay, so then we can go here and I can say give me 21 from here. Sorry, 21 from here. So we can take 21 from either the start of the catalyst, so that would give us a price target of $51. Okay, and then we can also have our next price target. So say call this. Let's make this dashed line. This. That's our first price target. Next one we can kind of take it as from 21 from here. So 21. Okay, so that's $36. So that's about 146, no, not 146%. So these are our two price targets, or we look for a divergence in the stock price. Okay, so that's just a quick video. This is kind of a really good play that I'm seeing play out. The market's corrected this week, and this one held steady for Fda approval. But yeah, thanks and peace.